Hi everyone, beautiful sunny day here in Providence, Rhode Island. I'm just heading up from Cape Cod where I made a speech yesterday for the Northeastern Gas Association. On my way to Boston to watch game 2 of my little tour here to watch my son Harry play soccer for Northeastern College. They got an away game tonight against some guys called Harvard. I have no idea who they are. Okay, so there's plenty of news flow today. On oil, we've been saying, I guess, if Brent hits 95, it's going to hit 100. That's just a market function, you know. 95 was what the Saudis said they wanted for oil last year. And we think 85 is their budget break even. They've got their foot on the neck of the oil market right here. And the tightness in global distillate is going to keep the refiners running as hard as they can. So I think we are going to have a continued run here in oil counter-seasonally. Because of Saudi's actions and whatever's happening in Russia. But the main thing is Saudi keeping heavier sour crudes tight in a tight distillate market. I think it'll keep the refiners running, and you know, we'll keep going here for a bit. And I'm talking a matter of weeks. We still worry that the Saudi spare capacity has to be unwound. And you know, if things slow down in a big way, that's going to become a major problem. So watch out for that. But in the meantime, we're not fighting the FAD, it was the line of our note. We're not fighting the central bank of oil here. We're long oil stocks actually at the moment in the paper book. And we added Oxy today, which we've been long before and we've talked about in our research. But Oxy has another big deal signed today with Amazon for carbon capture. And our argument way back in February was that Oxy has $25 of upside value from carbon capture alone. Plus it has oil price leverage, so we like that one. Bernard Looney resigns from BP. Bernard had a reputation for having girlfriends on Wall Street, nothing more sinister than that. So it seems that he, there's a Wall Street expression for it, which I can't repeat, but essentially it's to do with what you do on your own doorstep. Initially the stock actually went up, which I thought the market was going, hey, Bernard Looney's resigning, so strategy is going to change more towards the Shell direction, but it subsequently has been plummeting on the uncertainty, which is fair enough. In Natty, you know, the whole complex here is worried about winter. So although normally we would expect things to sell off after Labor Day on lower refining utilization, lower US travel demand, etc., I think here we're probably looking at some caution going into winter in case it is a cold winter. And we've talked about the Chevron LNG strike as being a contributing factor. So there's been some strength in European gas prices because Chevron's still in a situation around 5% of LNG supply globally, which is their Gorgon and Wheatstone projects. They're enormous. And there continues to be industrial action there, and that could tighten the market. For sure, fears about issues around Gorgon and Wheatstone are adding to the distillate tightness, and the distillate tightness is adding to the oil tightness. And that's why I'm saying, I think, notwithstanding, by the way, a very bullish action, which has been that crude is going up despite the dollar strength. You know, that's been also quite interesting. So we're riding this short-term trade here of long oil. I'm nervous. I haven't had great calls this year in terms of being in front of things. But, you know, as I said, you don't fight the fad. And I think Saudi plus distillate tightness is going to keep things going higher here. And then the speculators can pile in and give us the blow off top. All right, have a great week.